What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today, we have a very special evening planned. We're going to be going through a great recap on the trading for last week. And I'm going to be talking to you guys about all the great setups that you can use when you're trading every single day and really want to try to add some value and help you along your trading journey. All right. So if you're ready, let's step into the war zone. First and foremost, why don't you let me know where you're tuning in from tonight? Let me throw some of your names up on the screen. Trading Wars Army members, can I get a TW Army? And let me throw you guys up there. Appreciate you all. All right, so who do we have? Sil Kevin, what's going on, brother? Aziz, what's going on? Tamika, what's going on? Luca, Ernesto, Sandman, what's going on? Southstar, Trading Wars Army in the building. Andy, what's going on? Colin, what's going on from Missouri? Silk again. John, what's going on? Ernesto, good to see you. And all right, so thanks for being here, guys. Appreciate it. JB in the building. Sharky, what's going on? Trading Wars Army. And Eddie, what's going on? All right, so let's go ahead and start the show here. And I'm gonna show you all the live callouts that I did, and then I'm gonna talk to you guys about general good trading habits and different ways that you can trade in the market. And I'm gonna try to explain it like I was explaining it to a baby. All right. Tom, what's going on? Happy Hookers Fishing, what's going on? So we're going to start off with Tuesday. So the market was closed on Monday. So I'm going to hit the replay and we're going to get into it. So the first thing that you should always do is always have the previous day's high, okay, and low drawn. That's a must for me. And the reason is because depending on where the open of the market is, we will imply and use different trading strategies, okay? Because as a general rule, if we open above or below the high or the low, we will have a lot of good volatility for trading. If we open in the middle, we generally will have some sideways action. If we open near the ends, usually good volatility as well. So that's why you need to have the high and the low drawn so that it's going to go ahead and give you an idea of where we are and what are the strategies that we can use. Okay. So anytime that we're opening near the low or the high of the previous day, or we're gapping out of the range, I'm always going to start off with a 3-minute chart first. Okay. So 3-minute chart, I'm always going to start off with that. And the reason is because I want to use the 3-minute chart so I can get in quickly, right? I want to get in and get up. So I'm going to go into the Discord here and I'm going to start from the beginning of the week. And then we're going to talk about all the setups one by one, take our time and really try to learn. Okay. So the beginning of the week was the 22nd. So this is my live commentary right here. All right. So the first thing that we did is let's play the first 3-minute bar. Okay. So this 3-minute bar, guys, let me zoom in on this. We were hugging the previous day's low. So this is Friday's low. This is Tuesday's open. So you can see that this candle immediately opened near the low. So let's just think about what that means from a psychological and a trading perspective. If you were a bull over here, or if you're just a bull in general and you bought the dip and you're hoping that we're going to gap up and we open here, how would you be feeling right there? Hit me with a 1 if you'd be feeling great. Hit me with a 2 if you'd be scared. What do you guys think? And right there, right, we have this kind of trap, right? It's a trap because anyone that went long would be in danger, right? Because now their stop losses are getting threatened. Their position is being threatened. So anytime we have that type of trap, any type of volatility. So once I see it on the chart, the first strategy that I'm going to use is an opening range breakout. Okay. Always. Unless there's some rare situation, but generally I'm going to use an opening range breakout. So that's exactly what we started off the week. You'll see good morning all. We're hugging Friday's low here. Going to see the open, let you know if we take an orb. The short trigger is also below us. Hugging Friday's low. Let's try the orb with small size to test the waters. And then you can see we went short at 933 and we hit targets. So I'm going to explain that. The other thing that was in play on that day was the trigger trades. So the trigger trades, guys, are the automated trades that I always post the night before. So an automated trade, what it is a breakout trade where I know where my entry and my target and my stop loss are going to be on an automatic trade. What does that mean? It means that I could put it in the broker the night before and the broker will execute the trade for me. Okay. So let me draw this one up because we had, with the opening range breakout, we also had an automated trigger trade short. Okay. So right here, the short was 432.50. So I'm going to draw this with the short position tool. Okay. So 432.50. Stop was 434.43. 434.43. And the profit, excuse me, the profit was 430.66. So this is an automated trading plan right there. So I know what my entry, my target, and my stop loss is going to be ahead of time. With the trigger trades, I always start with a wide stop and then I tighten it up as I get closer to the target once I see the right price action patterns. Okay. So for the purpose of this video though, let's just keep it simple. Let's just say you never did anything. You just left it. So what we have here is a 3-minute opening range breakout. We also are filled short. You could see that this wick touches the short entry. So we're in short on the trigger and we're also in short. You'll see the next candle, opening range breakout breaks to the downside, right? So what is an opening range breakout? An opening range breakout means you let the first 3-minute bar close, then you draw 2 lines. So let's put these lines in yellow. So there's your low and there's your high. So whichever side breaks is this trade you're going to take. So if it breaks the low, you're going to short, you're going to buy puts, futures, whatever you want to do. And if it breaks the high, you're going to go long. So that's the opening range breakout. You let the candlestick tell you what to do. Okay. So that's a non-subjective way of trading. So in this case here, guys, we got the trigger short, which was up here. We hit the target within the first candle. And then you can also see that we got a good, one candle out of this orb. And because it was Tuesday morning, right? And the market was off for a while, I wanted to cover very quickly. And you can see here in my live commentary that I said, cover, 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 leave a runner on only. Massive drop here, guys. Congrats. Very nice trade. I have very small runner left on. So I always leave a very small runner because I usually take big size on these plays. So, if I have whatever, 5, 6 contracts at a time, then I would get rid of probably 4 to 5. Okay. It depends on how big my size is. And the other thing is this, at the beginning of the week, I generally like to take profits quickly so that I can build a position of profitability going into the rest of the week. It's hard sometimes psychologically to start the week red. And then, from that point, if you start the week red, you're digging yourself out of a hole. So those were the trades. Let me go back to the 5. So just to summarize this closely. So I'm going to show you other trades you could have taken now, but these are the ones that I traded. Cover means if you shorted, you're going to buy back your position. It's you close your position. Cover means close your position. So lock in your profits. So as a summary, I took the opening range breakout. That was my live call out on the 3-minute chart. So that's the one I called out on the Discord live for everybody. And I also did the triggers, which was a live trade that's fully automatic. It's automated. Okay. So from there, let's talk about the other opportunities on the chart, because I know a lot of you were asking me, so what else can we do? So I'm going to show you the other opportunities. I didn't take them. Okay. But I'm going to show you for educational purposes. All right. Anything that I said live is what I called out. Okay. So hit me with a 5 if you're following me so far. Hit me with a 5. When we take a 618 fib, is our target at a new high or new low, or will we do according to candlesticks? Either one. You just have to pick one that you like. Do some back testing on the one you prefer. If you want a new high, that's fine. If you want to play the candlesticks and use a trailing stop, that's fine as well. So personal preference on that. Okay. All right. So let's continue. So after that first 3-minute opening range breakout, I like to switch back to the 5-minute chart because generally, for me at least, the 5-minute patterns, I like to trade a little bit more because the 3-minute, sometimes you get too many signals. So I go back to the 5. Okay. And you'll see at the end, we also do the 15-minute chart, which I'm going to show you after. So what happens after this? Well, we have a big reversal. Okay. And my younger brother, Derry, he does a small account challenge for the room. And also on Twitter, he does a small account challenge and he uses the Fibonacci. So this type of trade is something he took. Okay, so I'll show you this one right here. So we continue, we have a pop high. All right, so anytime we have, especially a morning reversal like this, right? You see the push down and push back up. What you want to do here is, let me clean this chart up, is you want to stack a Fibonacci. Okay, so once you have a directional move, this is called a morning leg from my Fib book. What you want to do is you want to take your Fib and you want to anchor it on the low and bring it up to the high. And the reason for that is this: nothing is going to go vertically up forever. Okay, it's going to have a pause. Nothing is going to go vertically up forever. It's going to have a pause. It's going to pull back. So what you want to do is you keep moving your anchor point until we start pulling back. Okay, and the areas that you really want to focus on are the 50 and the 618. Those are the two areas you want to focus on. So we go next. Okay, so you see how it goes up higher. So what I'm going to do here is I'm going to move my anchor up here. Okay, and I'm going to be watching the 50 and the 618. Now we start to pull back. Okay, when we're coming back, the Fibonacci is helping me to look for retracements. And you can see when we start tagging like the 382 and stuff, we're going to be popping. But what I'm looking for is the 50 or the 618. And the reason why is because I want to get a good risk to reward. And there we go. We have a beautiful 50% retracement with an outside bar confirmation. And then we have a nice little pop into a new high. And that's what you're looking for on a Fibonacci play. You're looking for a pullback into the 50, 618, the sweet spot, and you want to get a new high. If you don't get a new high, that's okay. You can just trail on your way up, or you can take out partials on your way up. Okay. So the Fibonacci was something that Derry did. And then from there, the other thing that I have in my room are called fractal bot alerts. So what is a fractal? A fractal is an inside, outside, Nirvana, Holy Grail. Any of my 4 to 5, the fifth one is a double inside bar. Any of the 5 trading wars patterns that I teach you guys, anytime that happens, you'll see here, my bot will announce it. So the bot automatically finds those patterns so that we can stay focused. Because I don't want people to be gambling when they're in the room. I don't want them to be doing things that are not in accordance with the strategy. So if you miss everything, or if you want to trade something more, then what you want to do is you want to go ahead and start looking at the bot. Look for the bot trades. It's gonna identify them for you. So we had a few fractal trades here. So let's talk about them. So the first one is we had this inside bar, which was a nice scalp down. This outside bar, which was a nice pop up. And then this outside bar was a loser because you could see after we reversed with this one, this outside bar was the best one on the day because that one ended up being the high of the day. Beautiful. And then on the way down, we did also get another inside bar here and here, which produced a little bit of nice scalps as well. So that's the approach. Okay. Starting off, are we going to do an opening range breakout? Yes or no? Do we have a trigger trade in play? Yes or no? From there, where's the fibs? Let's take some fibs. And then after that, it's all fractal trades. Okay. And then the afternoon leg on the Fibonacci will set up as well. So let's just play this day out. Hit me with a 7 if you're following me so far. And as a general rule, guys, you want to take the trades, early in the day if you can, because those will always give you a good, a better probability than playing during the lunchtime. So I always try to avoid that. Or you want to play late in the afternoon looking for something into the close. All right, and let me just go to the 23rd here. And then I'll tell you exactly what we did on that day. Okay. All right. So how do you know which direction to go with the fractal? So there's 2 ways you can do it. The first way is just taking the breakout of the candle. So if it breaks low, short. If it breaks above, go high. That's the go long. That's the first approach. The second approach is using a Fibonacci. So for example, this outside bar is sitting on the 50% Fibonacci. So you only want to take it long. So those are the 2 that you could do either approach. You have to just be consistent with which one you do. Both of them have edges over time. So now let's go into Wednesday. So Wednesday is a little bit different, right? Because you'll see what happens is on Wednesday, we open in the middle of the range. And because we open in the middle of the range, I will not be taking the opening range breakout. I'm going to pass on that because I'm thinking that we're going to go sideways a little bit. Not all the time, but a good percentage of the time. So I'm always playing the probability because obviously I don't know what's certain. No one knows what's certain for sure in the stock market, but you have to play the probabilities in your head. That's the best way. Okay. So we have, we're opening in the middle of the range here. And then from there, guys, if I go to the live commentary here, so this day I said, good morning, gap up overnight, but we're still inside open. So I'm going to pass on the orb. And then what I ended up taking here, guys, was this pattern here, which is the 5-minute holy grail coming, get ready. And then we had another inside bar. And then I said right here, short. So we took the short at 950 and we covered our profits around 951. We had a big drop here, and I'm going to show you that. Okay, so let's go ahead and move on to that chart. So we go ahead here, the first 5-minute, we have an outside bar. Okay, the second 5-minute, we have an outside bar right there. Then an holy grail. So outside, inside equals holy grail. And then we had another one here, which was a double inside. So obviously, what does this mean? We had 5, 10, 15, 20 minutes of going sideways. Just look at the chart, we went sideways. So whenever we have these patterns, what I'm looking for is the climax. Okay, so all I do here is if we break below this low on this double inside, I'm going to short. If we break above, I'm going to go long. And you can see the next bar fills us in short. So right there, guys, when we got that strong push down, I took the majority of the position off. I let everybody know here, cover more, no greed. Okay, just because it's an inside open, you never know if we could reverse. And you'll actually see that this one, I left the runner on and it became a massive winner. Okay, so I'm going to show you big sell-off on that day. And you can see, guys, I'm never biased. I'm always trading the chart. And if you have a bias, you will find out eventually that you're going to blow up your account, because the chart is the only way to trade that doesn't involve emotions. And the moment you involve emotions is the moment you oversize, is the moment that you have a high chance of blowing up. And we've all been there before. I've been there before. That's why I'm telling you that. Okay. So the fractals, right? So we had this one that I called out, and then from there, the bot took over and we had this inside bar, which was a beautiful one, short. And then after that, we kind of went choppy. Like, this is why I don't really like trading into the lunchtime, because we usually have a little bit of chop. And then we had this Fibonacci, which was the afternoon leg, high to low right here, right back at the 50. And then we rolled over. So the 50 and the 618, those are the two you always want to watch. The last thing we had here was the V trigger for the automated trade, and I'm going to show you that. So if we go back to the triggers, so we had the short at 426.82. So I'm going to draw that right now. 426.82 and stop 429.54. Stop 429.54. So what you'll see here, guys, is we had a V trigger. What is a V trigger? A V trigger is when we get filled. So right here, you see on this candle, we got filled short. We pop back up and stopped out. Okay. But later in the day, we re-triggered again. That's why I call it the V trigger, because it's like a V. We come up, we come back down. Okay. So there's your V. So the V trigger, you can get back in a second time using the same plan. And then this one rolled over into the close. It was a great trade. Okay. Yeah. So there we go. So hit me with a 4 if you're following me there. And just notice, we did not take an opening range breakout on this day because of the fact that we opened inside. So we don't want to take an opening range breakout. All right. And I'm going to have to hit the replay here. I messed this one up. So let me replay again so we could do this one properly. So I got to go back to the 3-minute chart, and then the 24th was here. Replay. Okay. There we go. All right. So now we move on to the 24th. The same process. Here's the low. And let me put the high right there. Okay. So you'll see the first candle on the day is a gap down right there. Okay. So the first thing that I did here, guys, was I took the opening range breakout again. Nothing too shocker here, guys. Like, my methods are the same. I don't change things. I just keep it simple and I play the numbers. So here we go. So this was the 24th. Good morning. So it was a large gap down. So usually on a large gap down, one of two things can happen. We usually have institutional buying, right? Where we have a lot of buyers that step in because they're programmed. They have like mathematical programs. Like, if the market is down 5%, we buy automatically. They're those algorithms. And there's also the rug pull algorithms. So the rug pull algorithm will be like, after the first 5 or 10 minutes, if that low cannot hold, we can generally flush lower. So that's what I was looking for. And that's why I wanted to take an opening range breakout, because I knew that we're going to have a lot of momentum. And you can see right here, I said, make sure to size down. The open volatility is going to cause the range of these candles to be large. And that's something very important. So when the market opens up, So let's say on average, the market moves 1% a day. But when the market starts moving 2 or 3 or 4% a day, then you have to cut your size in half or cut it down to 1/4 of your position. Because if you don't, then your losers are going to be 4 times bigger. Your gains are also going to be 4 times bigger, but that doesn't allow you to consistently trade and you can blow up your account. So that's why I said make sure size down today. So let's try the orb 3, 5, 15 minute long. So I went long at 9:33. Very similar setup, guys. Boom. We got filled, took a little bit of heat, and then we started popping here. Beautiful run. Okay. So what else can we do here? Well, remember the same thing that I said, the Fibonacci. So we take it from the low to the high. We had this push up and then this pullback. We had the same pattern on the 50. Okay, we came back to the 50 and we popped. So there's your Fibonacci. And then from there, going back to the 5, we had a Nirvana. So a Nirvana is a fractal trade. And what it is an inside followed by an outside bar. Okay, so an inside followed by an outside bar creates a Nirvana. It's one of my special patterns that gets highlighted in blue. So some of my traders, they only trade advanced patterns. So this is an example of one. Or if you took the inside bar, you would have gotten stopped out first. Okay, because it broke the low first, so you would have gotten stopped out unless you played it based on the Fibonacci knowledge. Then when we turn around here, that's your signal to try again to the reverse side. And we have that beautiful, beautiful push here. You'll see, guys. Nice little push, and we all the way filled the gap. So I remember we gapped down and everybody was very stressed out. Everyone's like, the market is crashing, the world is coming to an end. But you got to trade what's in front of you. If I see an opening range breakout, I'm going to trade an opening range breakout. If I'm wrong, I lose 1 bar. Okay, that's it. I lose a bar. It's not the end of the world. And as long as my sizing is correct, I'm not going to have a problem. Then that's why I mentioned, if you are going into a very volatile day, like tomorrow is going to likely be very volatile, you need to have a sizing mechanism. Okay. And again, the Fibonacci's, my brother does them on a small account challenge, and the trigger actually on this day failed. Okay. So this is a day where the trigger lost. The trigger was right around here to the short side, and you could see we got filled short and we just turned. So that one was a loser. Okay. So, but on my live callouts so far, 100%. And then you'll see on the last day here, I'm going to hit the replay again, and then we'll talk about that one. Okay. So 9:30, boom, 3-minute chart here. Okay. So again, we have a nice little gap up. So the first thing that I want to do here, guys, opening range breakout. You'll see it in my commentary right here. So small gap up today. Let's try the orb. And I went long at 9:33. I took my partials. I scaled out and I got out of most of my position basically in 4 minutes. And the reason why is off of this 3-minute bar, we had a huge push up. So right there, guys, that's more than 1-to-1 on my bar. So that's good enough for me. Lock in, leave a runner on. So that was the live call out. And then from there, we switched back to the 5. And then from the 5, we had a little bit of a pullback here. And the entry for the long was down here. For the trigger. So you could see that we barely missed it. We barely missed the long, and we instead just went without it. And then from there, we had fractal alerts. We had this inside bar. This one was a loser. But then right after that, we had this beautiful outside bar. And let me just fast forward. You'll see that outside bar was a beautiful winner into the close. Okay, so that's how you do it. You start off, do I do an orb? Do I have a trigger? If not, can I look at some fractals? That's how I mix it up every single day. Okay. And I try to have a blend of different trades going, so that way I'm diversified. And all of my live callouts, like where I specifically said long and short, were 100% winners this week. And that doesn't happen all the time. Don't get me wrong. But what the point is, trade the chart. Trade what's in front of you. You can't control anything else. So you have to be wise enough to know what you can control and what you can't. Right? So after that, so now the next thing, for anyone that's struggling with the quickness, because obviously day trading is quick, guys. It's not easy. Don't get me wrong. It's not easy. It takes a little bit of skill and a little bit of practice. But for my new traders, I always recommend the 15-minute chart. So we're going to look at the 15-minute chart now and look at some opportunities for you guys. So hit me with an 8 if you're following me. Okay. And on the 15-minute chart, you'll see my bot is designed to focus on the 5 and the 15. So it'll always call out the trades on the 5 and the 15. And we're going to look at the 15-minute chart now, because For some of you, the 3-minute, the 5-minute in the beginning, it's going to be too quick. So I always say, all right, either focus on the triggers for the new traders or focus on the 15 because you have a lot of time. Okay. So here on the 15, let's look at the opportunities on the 15. So let me get rid of all of these. I already did all the summary there. And you can see here is the 22nd is here. So starting off with the 22nd, guys, we had a little inside bar here on the 15, which didn't really produce much at all. But after that, we got a beautiful outside bar. That outside bar literally was almost the high of the week. It was the high of the week for basically 3 days. And then on Friday, we popped above it. But I mean, that's an amazing short, right? That you can take. Then we had this Holy Grail, beautiful as well. Nice little tight Holy Grail, quick scalp down, bam. I don't like to trade the fractals too close to the end of the day because you won't have enough time for the chart to play out, right? Like usually the last hour, you don't want to take it because you need a few bars in order to get to your targets. Okay, so that was a great one setups there. We had this one here, this inside bar. I wouldn't take that one, a little bit too late in the day. And then later on the 24th, we had this outside bar, which was a little bit of a failure to the downside. But this Nirvana here was the beauty of the week. Very tight Nirvana. So for those who trade my advanced patterns, very nice Nirvana. And then also an inside bar following up, take you into the end of the week. All right. So that's beautiful. So that's for anybody that's new and you want to focus on the 15. Go right ahead. There's always great opportunities. The most important thing you got to focus on is your risk to reward. Never lose more than a bar. Okay, that's my philosophy. Never lose more than a bar. Take a bar by bar approach. Okay, that's the right way to do trading, guys. Don't worry about things that you can't control. If you do, you're gonna go crazy. You're gonna oversize. You're gonna blow up. All right. There's no way to avoid a fake out. There's no magic sauce. If it fakes you out, you get stopped out. And then you look for the next setup. There's no secret. Like there's gonna be losers. That's how trading is. All right. So hit me with a 10. Hit me with a 10 if you learned something from the stream. And yeah, just to show you my brother's account here. Let me pull it up here 1 second. So this is my younger brother, Barry. He's a part of the room. He helps us out, and he also does a small account of challenge with futures. So he's on day 25 of the challenge. So he does these recaps every single day, and he uses only futures contracts. He doesn't use options. Okay, so it's easier for him to learn because he doesn't have to deal with all the Greeks. He just takes contracts, buy low, sell high, sell low, buy high if you're short. Okay. Or did I say that right? You get the point. So check him out. And if you want to learn more about small accounts, follow this channel, TWIIB right here. TWIIB. This is my younger brother. Okay. So there we go. Thank you. That's what I do. And I want to share it with you guys because you can apply it to anything you trade. You have to always remember everything is a probability and numbers game. It comes down to risk management. The volatility in the market is going to be extremely high tomorrow, so you need to size down. Just take it from me as a good rule of thumb. If the market volatility increases, you cut your size in half at least. Sometimes you got to go lower than that. So be ready for that. Otherwise than that, guys, check me out at tradingwars.com. If you like what I said, if it made sense to you, if it helped you, you can get any one of my 3 books. And it comes with 1 month for free in any room of your choice, the stock room or the SPY room. I think that's a great value, guys. And you get the education and the experience to trade with me tomorrow. All right. And if not, you can just sign up for the rooms directly on the main page. Thank you very much. So let's go ahead and do some giveaways. And before I forget, so the first giveaway I'm going to do is for the first giveaway that I'm going to do is on a YouTube comment. So let me go ahead and pull up a video. And then I'm also going to do a giveaway specifically for my Trading Wars Army members. Okay. And if you're not an Army member, please join soon so that you have a chance to win this giveaway if you're interested. Okay. So let me go ahead here and get the videos. What do we have here, guys? Let's pick one of these good videos here. All right, so let's do this one. This was a very good video. I was very proud of this video. So we did the live midday trading. So on Friday, I went live and I gave 3 trades, and all 3 of them were winners. So please watch this video if you have not seen me trade live. Okay, please watch this video one right here. So let me just like everybody. I appreciate everybody. Thank you very much, guys, for the support. All right, so right here we have 48 comments. The live midday trading, we took live trades together, guys. This was on Friday around 1 o'clock, I think, or 12:30. Some great trades. I did a nice one on Facebook. Check this one out if you want to see how I trade live. And so I'm gonna pick a winner here. So there's 48 comments. So let me do a random number generator right now. And 1 to 48. So let me just bring this over here so you guys can see. And yeah, why don't you guys hit me with a drum roll right now? Hit me with a drum roll, please. Let's go ahead and pick a winner. Thank you so much for being here, guys, on a Sunday night. I appreciate you. It's really, really good to have you guys have the support in here, man. Sundays are always our best videos. We have a lot of people turn out. You guys are ready and active for the market tomorrow. You know, that's good. Keep chasing your dreams, guys. Don't let anybody take them away from you. So let's do this. 1 to 48. Who do we have? Number 24. Okay, so here we go. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 4. All right, so here we go. This is the winner right here. Michael Terrazano. This is what I need to see how to apply your strategies in real time. Thank you very much, brother. So go ahead and DM me on Twitter and let's verify, make sure that's you, and we'll go ahead and get you a free copy of the book and 1 month for free in the room. Thank you very much. And guys, as always, you comment on any one of my videos at the end of the week, you have a chance to win a giveaway. So it's really, really good. And then let's go ahead and do one for the Trading Wars Army members. So anybody with a green in their name, like these brothers right here and sisters, this is a giveaway specifically for you. There's only, I think, like, let's see how much Army members we have right now. I'm gonna pull it up. Let's see how much Army members we have. So Trading Wars Army members, I appreciate you guys. Thank you. Let's do one for you guys now. Let's see how much members we have. So we have a total of 89 members. Okay, so I mean, that's not bad odds, guys. That's better than playing the casino. You have a 1 in 89 chance to win if you are a member. All right, so let me go ahead and do the okay. Before we do it, I'm gonna give you guys one more chance to enter if you want to, and we'll take some questions in the meantime. So to enter the Trading Wars, to become a member of the Trading Wars Army, I'm gonna show you guys how to do that right now. So all you got to do is you got to go to the channel right here. Here's a Trading Wars channel, and you got to click join. Okay, so I'm gonna copy this, post it in StreamYard. Okay, all you got to do is go and click join. $4.99 a month, guys. You get all the emojis, custom questions, blah blah blah, charts, etc. Good stuff. All right, and you have your own giveaway every week. That's pretty good. All right, so let me take some questions. I'm gonna give you guys some time to join if you're interested. So what questions do we have about today's stream? Anything in particular that I can help you guys with? Feel free to ask and I will go through them. Generally, for me, my standard approach is I take a few trades on SPY, and from there, I go to my stocks and I look for trades. Okay, are you using Orb tomorrow? Yep, most likely if we gap, I will. So which service is for automated? Both of them. I have automated trades for SPY right here. So these are the trigger day trades, and I have automated trades for my stocks, which are part of these trade plans that I post. So I have both. So I always do automated trades, always. Joy, welcome to the Trading Wars Army. Thank you. Or sorry, Jay, welcome to Trading Wars Army. Guys, can we welcome Jay with a Trading Wars Army SPY VIP? Can you explain what you mean by never lose more than a bar? So what I mean by that, let's look at this one, for example, this Nirvana, right? So if you're taking this Nirvana, right, it breaks to the upside, right? So what I mean by never lose more than a bar is if you're taking this trade long, okay, your stop loss at the very least will be below the bar. So if it comes around and it turns, when it takes the bar out, you want to be out. Okay, that's a normal stop loss approach, right? You just put your stop on the other side of the bar. You don't want to like remove your stop and then it goes all the way down here and then you get stopped out. That's what I mean. You don't want to lose more than a bar, because if you do, then your risk to reward will become inverted. Any difference between playing futures and SPY comms is the same thing. The same thing. There's just leverage is different. And like I said, my brother, he does futures because he gets good leverage with a small account. When I'm trade, I keep looking at the effects of my psychology. Any advice? Well, the best advice to deal with any psychological trading issues is just to get off of all social media and to do more back testing. So if you're one of those people that are watching the news or you're on Twitter, you're listening to what other people are saying and you're trying to see if somebody's going to tell you what to do, then you need to leave that behind, because that is going to affect your emotions. You need to get your chart and do your back testing and figure out what strategies will work for you over the long run and just stick to those. That's what I did. That's what I did. Can you watch a video later? Yes, you can. It'll be posted on YouTube. What else? Is it normal for your 5-minute bar high and low to be different than mine? I'm using Tradingview as well. They shouldn't be different. Just check if you have live data activated. I have a partner account with Tradingview. I believe it's just the premium data. Why is Ragnarok so powerful? It's just an extra form of consolidation. SPY going to potentially open down tomorrow as long as it stays above. Can we long? I mean, when we have to wait till the open. There's a lot of time from now until the open. That's when when we get to the open, then we'll look at strategies. You don't want to try to guess things now. You trade what's in front of you. Which book should we pick up as a newbie? The SPY book is really good for those who trade SPY, and I think it's a great starting point for most traders. Definitely. The Fibonacci is my most advanced book, but it's probably the most powerful one. All right, so let's go ahead and do this giveaway right now. So here we go. I'm gonna see here. How much do we have again? I'm gonna pick another random number. 1 second, guys. I think I lost it here. 1 sec. Customize channel. Any other questions? Why do you try and Tradingview but then do actually trade another brokerage? Doesn't it make it hard to trade? I trade in interactive brokers because they have the best commissions for me. That's why. I would love to trade in Tradingview, but personally, the brokers that they use, I'm not familiar with, and I don't really like. I don't want to say I don't trust them, but I don't, because it's my money, and I want to make sure that I'm using a broker that I know I trust, right? And interactive brokers is something that a lot of other people in the industry use, and when I first got into trading, I've used them and I never had a problem. So that's why I just use interactive brokers. It's really not that hard to take the trades, because I have charts open on interactive broker as well. It's pretty much the same thing. But I like Tradingview because it uses my scripts. All right. So here we go. All right. See your members. All right. So here we go. We have 90 people now. So I'm going to go ahead and do random number generator again. Random. And we're going to do 1 to 90. Ready? Let's go. 20. All right. So I'm going to go pull up number 20 on the list here. So where are we at? All right. So number 20. 1 second, guys. 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. All right. So we have the winner right here. Let me take a screenshot of this, guys, so I can show you. Boom. All right. So the winner is Marcelo Helminski. Thank you very much, brother. I appreciate your support. Just DM me on Twitter and we will take care of you, get you a book, get you all set up. All right. Thank you very much. Appreciate you, Marcelo. All right, guys. So there we go. Great stream. I hope that it added value to you. I hope you appreciated it. And you don't have to trade like me, or, you don't have to copy me, but I want to give you knowledge and tools that you can build your own strategy. And in this game, being creative is what's going to make you the most money. Be creative and challenge yourself, find ways to get better. I do that every single day. And that's how I keep evolving as a trader. And things are not going to always stay the same. Just remember that in trading, it's constantly evolving. It doesn't stay the same for anybody. So you have to always be willing to put in the work, to adapt, and become a better trader. And that's why it's the greatest game in the world. It's the most rewarding that you could do, because there's no limit to how much you can earn. All right, there we go. Don't forget to comment, guys. Comment on this video. You have a chance to win a giveaway next week. All right, we're going to keep doing them. Thanks so much. Please comment. Let me know what you thought about this. And we try to do these every week if you guys really like it. All right, thank you very much. You take care.